Now, as we go through, the second segment, we want to look at what's happening with U.S. Refined products and what do we expect to happen going forward. When we look at what happened this past week, or at least what this is covering, we had Columbus Day or Indigenous People Day, depending on how you recognize it. And that was, again, we normally have that long weekend. Some people take that time to travel a bit. And that came through in the data again. It's just going to be a matter of, where does that swing really show? So as we were saying last week, we expected to get a bit of a bounce in distillate, as we normally do, where you have a down week and an up week, just given some of the movements. The concern, or one of the things that we were saying with gasoline, is we could either get this kind of sideways move as we've had some of this lumpiness, or it's just kind of this big snapback. We had that big snap, and now we expect that to, again, come back down, because we had us closer to about 9.2 to 9.3, came in over 9.6. So that just means that we'll come closer to about 9.1 just to make up for some of that difference. Just because, when you look at where some of the swings are, there's been overshoots to the upside and to the downside, and we still remain relatively fixed in general. You can see that we normally kind of get that increase. So it's now actually pulled the average up to in line with where we were in 2017 and 2018. Still below 2019, but again, there were some unique instances in that. So that's not something to be concerned about, because 2017, 2018 are much closer to that normal. And then you can see that there's that normal drop down, as you saw with a little bit of a flatlining in 2018, but that little dip in 2017, we expect to see something similar. As you remember, last week we had a average. The demand for the week was 14.754 million. We expected to see that bounce. It did. We came up to 15.687, which brought us to an average of about 15.3. We expect that, again, to be closer to that 15, just below 15 million. It's just going to be that lumpiness as we come to the end of, well, let's just say this quiet period, if you will, between holidays. Now you start to get some of that that grind, if you will, as we look forward to Thanksgiving, and that's just really what we're going to see as we go forward. And we'll talk about what is going to drive that really as we progress through, specifically product by product. So when you look at distillate had a draw of 3.91 million, with bringing us 14 million below the 5-year average. You can see PAD 1 had a small build of 870,000 barrels, which is now just 11.3 million below the 5-year average. And PAD 3 had that draw, because really the draw in distillate was driven by PAD 3, which had a draw of 3.25 million, which is now just 3 million below the 5-year average. When you look at imports remain elevated versus historics as the PAD 1 continues to draw in a lot of that excess. And you can see that we normally have draws this time of year, but you can see that it's just the pace has been very strong versus historics. And again, that's going to be that concern as we go into the winter months, and especially when you look at how some of the shifts are. So production on the distillate side was actually at a big down move. So distillate production dropped 289,000 barrels a day, and again, it's really because of the process that was brought down by some of the unplanned downtime. Really is the one that is creating these distillate barrels, which brought the yield down by 1.78%, with the biggest one obviously being in PAD 3. So that's something that will reverse, and just because it's reversing, you still have a lot of diesel demand for trucking, and we'll go through some of those specifics in general, but this is going to attract more imports into PAD 1, given where we sit off of the normal, and then at the same time, it's going to incentivize more operations within the U.S. So as we were expecting last week, we expected to get that bounce off of the 5-year average. When you look at it seasonally adjusted, a new seasonally adjusted high, we just expect it to be, coming back to the 5-year average, bouncing back up, just because there is a lot of demand for diesel, especially as we come into this final, let's call it this push of getting product to market and trying to restock some of these shelves. Because I know by me at least, shelves are still bare depending on what you're doing. Gatorade or Pepsi, if you will, has really tried to focus on their fruit punch, lemon, lime, and orange, and dropped away some of the ancillaries or their loss leaders just to try to keep, because those are the ones that are driving the top line. So you're seeing companies essentially say, look, I can't give you the variety you're used to, but I can give you kind of our best sellers. And that's what we're seeing more and more of to try to streamline some of that supply chain. Now, on the trucking side, you had a little bit of a move back to the lows, but when you lows being relative, because we still expect to see this grind back up to about 175 on the demand index. Load availability is still elevated. It's just you're seeing some of these rates flatlining a bit, even though we're seeing prices continue to go higher. As again, the price of diesel just is an endless move up. Now, when we look at rail traffic, total car loads were still 1.2% above 2020. A lot of that was driven by chemicals. Coal is starting to normalize a bit. That we expect that to remain elevated. Same thing with grains and farm products remaining strong. Motor vehicle parts is going to remain depressed, just given we did have some additional shutdowns that were announced for October and November. That'll put some of that slowdown, while metallic ores and metals remain elevated. And then petroleum and petroleum products is one that we think is going to continue to see some of this elevated move as we head into the winter months of trying to move some of that distillate from the pad 3 into pad 1. On the intermodal side, we actually had a decent drop again, and that's something that we've been talking about, where there's some of these overhangs where even though there's a lot of cargoes to be moved, a lot of containers, the intermodal side has slowed down. We do expect that to ramp back up. But as we've expressed before, there's headwinds when you're looking at some of that chassis shortfall and some of those labor issues, which is just leaving some of this congestion in the system because they're not able to move and process things at the pace or the speed that I think they really wish they could. So again, the intermodal side will get better, still be below where we were this week versus 2020, but again, still moving in the right direction. And there's no shortage of containers. So when you look at what's, we're getting this pile up again. When you look out through October and into November, a lot of these cargoes are ones that were pushed. If you think about the beginning of September, as they were trying to accelerate some of these movements, get ahead of Golden Week, ahead of some of the slowdowns in Asia. So now that was all throughout September. So we're going to continue to see some of these car loads. And again, if you think about timing, that also bleeds into August. So August and September, we have that backlog. It's going to be coming through into the import side. Oakland has some spare, so they're trying to call for some vessels to shift from Los Angeles up into Oklahoma. Wow. Oklahoma is not on the coast. Oakland, and that's where you're starting to see some of these shifts, and you're starting to get some of those movements higher. So again, this should help some of that slowdown at the ports, but again, it's still going to take time to see this move through. As heating and cooling demand are going to stay fairly stable. We still have a fairly warm middle of the country into the East Coast, which is just going to keep heating demand minimal, and again cooling demand minimal, just based on where we are in the October months, which is going to be fairly flattish for natural gas and prolonging essentially when we start to see some of this fuel oil, heating oil burn, which again, that's why it's always a matter of, is it the second week of November? Is it the third week of November? It's all going to come down to when that temperature starts to shift. Now, gasoline had a fairly sizable draw, coming down 5.37 million barrels. That's 7.1 million off the 5-year average. And if you look, pad 1 is the biggest driver of that, being 7.1 million below the 5-year. That's where we had the biggest draw of 2.72 million, while pad 3 had a sizable draw of 1.54 million, but they're still 1.8 million above the 5-year average. Now, one of the things that we were talking about before, we're still above the low of 2021, but this is typically when you start to see these drops. When you look at the top end of the cloud, you can see that essentially the pace almost mirrors it exactly. And it's not that we're going to get this big snapback up, but again, as we were saying, just going sideways at this point. We thought it could go sideways from the higher end and have this move lower over kind of a gradual 2 to 3 weeks. Instead, we just had it all come down at once. And now this is where we start to see this come sideways. Now, on the other side, imports will continue to slip. We had a small increase of 63,000 barrels a day. And that was really driven by Pad 3, but more so by Pad 5. Pad 5 is now 65,000 barrels a day over normal. Pad 1 is going to continue to see this gradual slowdown of imports, still be, I think, seasonally average. There's nothing to say that they're going to get a big drop, but again, you're going to be seasonally normal. On the 5-year side, while Pad 5 is going to remain elevated but lumpy, as you get some of those movements from Asia into Pad 5 in the West Coast, which again is just going to keep gasoline fairly fixed as production or yield of gasoline stays anywhere at about 64% at this point in time. Then when you look at blending components finally had a nice drop of 5.77 million, which is now right in line with the 5-year average. So you're starting to see some of the demand that went through. You had that clearing, which it is a nice catch up. It's just that was some of that proof that you had a big push through the blending side, and that's something that we had been missing the last couple of weeks, where you were getting some gasoline draws, some gasoline builds, but you had this steady build in blending components, and this big makeup shows that you had a lot of that movement through the system, which gives us confidence at this point that on the implied demand side, you're going to see that come down just because this was kind of that big makeup with the blending components moving through the system. Then when you look at the weekly gasoline demand, you had that nice pop. Obviously, you had the extra driving day, if you will, from Sunday and Monday. So according to Gas Buddy data, weekly U.S. gasoline demand jumped 2.3% compared to the last week and was 0.9% higher than the 4-week average and the strongest week since September 19th. So now, according to Gas Buddy data, Sunday U.S. gasoline demand is coming into this Sunday and Monday, rose 2.49% from the prior Sunday and was 1% higher than the average of the last 4 Sundays. Monday gasoline demand rose at 2.53% and was 2.1% higher than the average of the last 4 Mondays. So far this week is also starting out strong. The question is going to be, do we see some of that drop off as we start to get some of the comps getting a little bit easier? I just think that we're here. Again, up at 1%, down 1%. We're going to see some of these movements and then as we get into the end of October, then you'll start to see this roll off a bit and slow down a little bit more until obviously you get that big bump that we normally have when we look at Thanksgiving. One of the things that is going to continue to be a growing overhang is obviously the price of gasoline. So gasoline increased another 6 cents to $3.32. You're just seeing this steady grind higher of, or not even grind, like essentially gapping higher of gasoline prices, which, if you remember what we were saying, $3.15 was really where we were going to start to see some of these individuals questioning how much they're driving. What does that look like? Now we're at $3.32, continuing to drive up. On the other side, diesel up another 8.5 cents, going to $3.67. That is the one that continues to be that overhang when you look at how much does it cost to move stuff through the system. What is that pricing looking at? And diesel continues to be one of those big overhangs. So again, just based on where crude is, where refined products are trading, you continue to see this movement higher and putting that kind of cap on where that new consumption is going to come in, and eventually you'll start to see that work its way down as people redirect their spending habits. Now, when you look at blending components, here's where we were at the second highest ever. Now we're right in line with where we were in 2020, where we were in 2016. And you can see just based on this, we normally get this drop. And that's, I think, an important piece is we normally get this drop. We think the pace levels off a bit and we start to just go sideways again, following kind of this normal seasonal trend. So nothing crazy to write home about when you're looking at that underlying. When you look at the spike, we had that nice little spike. You can see that we normally get one. This one came a little bit earlier, and that's where we expect to see some of this movement back down. It'll still be within that above that 15-year average as we're getting closer and closer to that 5-year average. Now, when we look at the 5-year, you can see that we're just above where we were in on the high point, and we expect to see this bigger drop down when we look at some of these movements. Again, not as low as we were in 2016, but we would move back below where we were in 2018 and 2017, which is, again, just that 2016 had that abnormal drop. We're just going to come back, I would say realistically, just where we were last week. So not a huge drop, but just where we were, coming back to about 9.1. And we'll average out between that 9.2, 9.3 as we go through the remainder of October. And here's where we're starting to see some of the level off, retail, recreation, flatlining, transit stations as the workplace comes down a touch. Residential still remains elevated versus historics. Parks, again, is going to remain elevated as we go through the remainder until it gets too cold. And then people, start to stay indoors versus going out. Apple still remains strong versus where we were. Typically, as we get into the end of October, you start to see that drop off. Things have been held in a bit better just with weather being there. And obviously, we're not having the increase in cases as we were last year, which, again, is keeping people more mobile. So then when we look at propane had a drop, had an increase of 1.92 million. We're still well off norm. So we're still 15.9 million below the 5-year average and really still the lowest ever. And this is going to be concerning because demand remains strong and we still have a big increase in exports, which again is keeping us at this depressed level, which is being reflected in the days of supply, where we're going to get a little bit of an increase, but you can still see that we're getting to a point of this is going to be a very interesting end of the year, especially as we're coming in at a very low level of storage and demand and exports remain elevated. Vaccinations, when we look at just the pace, they remain fairly stable. When we're looking at activity across the region, you can see some of them are dropping off as it just in general, the pace is slowing as they were reaching anywhere from 50 to 70% of the populace within a country being vaccinated, which you can see here when you look at the U.S. is kind of flatlined. India continues to move at a steady rate, where Italy and a lot of these countries are reaching that 70, 75%, which is where you see a fairly sizable taper off in terms of that new vaccination push. Now, when we look at jet had a small drop of 400,000 barrels, right in line with the 5-year average, so really nothing crazy. We were expecting a bigger spike in demand. Instead, we were at the lower end. So this just means that we should get one more push because you can see where we normally get that spike up for Columbus Day. Again, it'll come. It's just going to be in 2 lots instead of 1. And we still had a fairly smaller increase in passengers even for the holiday, which again, it keeps us in line with what we're thinking between that 1.35, 1.55, and just kind of staying within that demand range from the jet fuel side. Global departures were up slightly by 1.6%. You had the North America peaking. You had Europe coming up as Asia and rest of the world is fairly flat. The passenger flight scheduled for the 11 weeks ahead declined by 0.5% since last week, and that was really led by Asia Pacific. As we go forward, we're going to see Asia Pacific come down. Departures in China decreased week on week due to the outbreak. The decline was offset by an increase in India and Southeast Asia, but as we go forward, there's a fear that the increase is that they're going to continue to find more cases, so that'll roll some things back in general. Same with some of the Singapore flights, just given some of the outbreaks in that region. TSA, you had that. You can see in 2019, you had that little pop for Columbus Day. Here, the pop was obviously a bit more muted, but you're coming back down in the seasonal norm. As we've been saying, we're just going to remain below where we normally are for this time of year, just given the underlying demand in the system. And then when you look at what's happening on the restaurant side, again, weekdays 0 to 5% better, and weekdays 10 to 15% worse. That continues to hold true. And we just see that being, again, that normal case as we go into through the end of October into November. So not too much has changed. Obviously, distillate is the bullish side. Gasoline, that lumpiness as jet continues to drag lower. So now that we've gone through the U.S., we want to pivot and look now more at the U.S. and what's happening in the global energy markets.